Hey, Captain FICO here, and today we are going to do a review on Self.Inc. INC. Who are these guys? What are they doing? They're giving out these loans. They're, no money, collateral. Well, who are these guys? Are they legit? What's happening? They got all these great reviews. Are they real legit? Are they real? Well, let me tell you, they're so good. I included half a chapter on them within my best-selling publication, Captain FICO's Credit Repair Secrets, which you can get at CaptainFICO.com if you're interested. If not, that's fine. We have a whole bunch of resources for you on CaptainFICO.com. But first, let's talk about Self.Inc. Who are they? What do they do? They give out secured loans without any credit check. Here's how it works. There's a $10 administration fee. That's waived if you go through the link below on this video. Just click the link and it'll take you right there. You fill out. Now, what it basically is you're giving yourself a loan. You're making the payments. It's going into an account. You can get the money out anytime you want. You want the loan to mature and then take it out. But if you're in some sort of dire straits, you want your money, you can close the loan out and get all the money that you put in back. Okay? Why does this work so well? It shows up as a bank loan. A bank, they use two banks. So it'll show up as one or the other. And it'll show up on all three of your credit reports as a bank loan. Now, FICO does not see that it's secured. FICO doesn't care if it's secured or unsecured. It just sees it as a bank loan. So, regardless of it, whether it's secured or not, FICO just sees it as a bank loan. Okay? So, this is really important. And this is why when you see these huge reviews, oh, my score went up 100 points. My score went up 120 points. They're real. Because FICO puts a lot of emphasis on a bank loan. Right? More so than secured credit cards or anything like that. This bank loan is very important. It's a must-do if you're rebuilding credit or trying to raise your FICO. It's a must-do, the Self.Inc. Okay? Now, let me give you some tips about how to use Self.Inc. There's two loans that you can get with them. One's for 2 years and one's for 1 year. Always choose the lowest loan amount, time. Here's why. Because as your loan gets paid off, FICO sees that it's paid a percentage of it's paid off. Like once it gets to 60% paid off, you're going to really start to see FICO go up with it. But FICO will go up right away as soon as you get that loan. And there's no hard credit check either. So you're going to get approved. So it's a no-brainer. This is a no-brainer. You have to do this. Okay? So FICO's going to see it as just a regular bank loan. I say take the 1 year one because as you pay it off, it's better for FICO. So you don't want the 2 year one because it's taking too long. Why get the 2 year when you can do the 1 year? And after you get the 1 year one done, get another one. Always have a self-lender loan on the go. Always. Regardless of how high your credit gets, always have a self-lender loan on the go. Always. You'll see if you stop your self-lender loan and don't get another one, you'll see a dramatic drop in your FICO. A dramatic drop. So always have a self-lender loan. And always go with the lowest term, the 1 year. And also, go with the lowest amount that you can do. I think they have a 25, a 48, and a 100. Well, the 25, they'll only do that with the 2 years, so don't do that. But go with the lowest 1 year term that you can get. Yeah, probably $48. So, you pay that. But here's where things get really, really good with Self.Inc. After 3 months of making your payment, so say you're on the $48 one, so we'll say $50 to make it easy. So you got approximately $150 in there, right? You're on your third month of paying. Well, you'll automatically qualify without any sort of inquiry or anything, hard inquiry, for their new card, which is a secured credit card. Now, with the secured credit card, you can choose your limit. So you want to choose the lowest limit. So you've got $150 in there. You want to choose $50 on your card. So now what's happening is you're going to see that the loan is showing up on your FICO and the card is showing up. And just like I told you about the secured loan, not FICO doesn't care if it's secured or unsecured. It doesn't care about credit cards either. Really. Secured or unsecured, it doesn't matter. Why would it? It doesn't care. Well, you secured the card, so what? It doesn't matter to FICO. It just sees it as a credit card. That's it. It's a credit card. It's a credit card. So you've got your credit card on the go. Now, here's what you do. You've got your loan. You've got your credit card. Now, you make your fourth payment. Your $48. Every time, every month, you can give yourself a credit line increase. Okay? And do it. Give yourself a credit increase of the lowest amount that you can. Probably like $25. Do it. Every month. Add $25 onto your secured card. And now what FICO is seeing is your loan, your credit card, and it's seeing that the bank that issued you your card is increasing your credit limit, which is huge to FICO. It's seeing that the bank is increasing your credit limit. So you must be a great guy, right? It's you increasing it, but FICO just sees it as the bank is increasing your credit on your card, right? So you see how this works? It's just do it every month, and you'll see your score go way up. All right. So that's it for now. The link's down below. Please like this video, and there should be a little subscribe button coming out on this side, I think, or maybe that side. I don't know, but make sure you subscribe and go to my website. If you have negative items on your credit report, you have to get rid of them. You don't want any negatives. Don't pay your collection accounts. That doesn't help. FICO doesn't care. Sorry. It just doesn't. Because it was in collections. You have to have them removed. And I've got some really, really, really great and easy ways to get those negatives off your report. Just go to my site, CaptainFICO.com, and thanks for watching, guys.